Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you guys are looking for some undervalued investment opportunities or financial education, or you're looking for some sort of answers to some questions, click subscribe, throw them in the comment section. I can try to help you out. Today I was scrolling through the comment section. It says, Andy, when you mention of the precious metals blow off top, when gold, platinum, silver can buy the most house, if we were to use the median price of new house as a benchmark, how many ounces of gold, silver, platinum do you think is needed to buy the house when the metals go parabolic? I don't know if they're going to go parabolic, but they do one last move for about 1 to 3 years after the peak of commodities or housing, I should say housing starts. That's what it did last time. So we'll see. It might be a little bit different this time, but I can go through some information that I gathered. I wanted to touch on two things. Somebody in another comment asked me, why don't you go over one of the mistakes that I did when I didn't know about ratios, when I didn't know about all this stuff. So I'm going to tie this together. I'm going to go over one example of where I messed up and I sold too early. And then I'm going to go over what I could have gotten if I had known what the heck I was doing and what I'm setting up for this next commodity boom. And then I'm going to go into looking at the precious metals, showing you kind of when that signal is thrown, the couple of years after that they run up. And this is only for gold and silver that they do the run up. I'll show you what platinum did as well. And then I'm going to look at the real estate to gold ratio like you really wanted to do a direct comparison. So let's go over my mess up. I'll stay out like this. It was Chesapeake Energy Corporation and Ultra Petroleum. Those were the two. Ultra Petroleum's, I don't think is in existence anymore, but Chesapeake Energy, they were higher cost natural gas producers. And I have two circles here on the chart, these two. And remember, I didn't know anything. Like I just graduated college. I wanted to get into investing and I was just starting to learn. So I was fresh out of college. I didn't know really anything about investing at all. But I saw that the natural resource sector was going pretty good. And I felt like I was an all-star. I made some money here. I bought it in this circle and I sold it in this circle. And I made money. So I was a young guy, didn't know anything. All right. I didn't know ratios. I didn't know how to really value anything. I was a price chaser just like everyone else. And I did that. And then after I sold out here, because I was like, that was so amazing. This is going to go back down. I missed out on this gigantic peak. And this was a big move. And it looked like it was just going massively up day after day after day. And I was like, man, that was a big move I lost out on. I mean, I didn't know what I was doing. But that was one that I sold early and I just didn't know what I was doing. Trading in and out was not a good thing. I tried doing other things with other companies too, and it didn't work very well. But I also didn't really know what I was doing. The next slide, if I had known this is what I'm teaching on the channel. I can move this over here. So what I'm teaching on the channel is ratio investing. And what this is the Goldman Sachs Commodity Index versus the S&P 500 ratio shown over time. The green is when the ratio is good for commodities. The red is when you want to sell your commodities. And it goes from an undervalued against stocks state to an overvalued against stocks. So commodities to stocks is what we're looking at. When the ratio is low, you buy commodities in the green and you sell them in the red. Now, if I had known this and I was a seasoned investor like I am now, and I were to play Chesapeake again, I would have bought at the green circle in 99 right here and sold it in 2008 right here. The timing of that is impeccable. Now, the reason I didn't do it at the top, I wouldn't have gotten that top. I probably would have sold after it came back down or sold a little bit early. So I'm giving myself a little bit of not getting that top. And remember, this was up there for many months. So I bet you I probably, with the technical analysis I have, I might be able to get pretty close to the top. But I would have held on this entire way, and it wouldn't have been an easy ride. It really wouldn't have been an easy ride because everyone thinks looking backwards and looking at these two circles, it's like, oh, it's so easy. I'll just hold on the entire time, right? All you have to do is stare at these two circles and it tells you everything. Here's the problem though. When you look at this, you had to ride up and then there was a big pullback. You rode up, big pullback. You rode up, big pullback for 2 years. Now, how many of you honestly are going to be in this for 9 or 10 years? Most people they're gonna say this is dead money. And then you go from $5 to $35 in 2.5 years. It goes sideways for a little bit. There were some hurricanes in here. I think this was a hurricane too right here. Went sideways and then went all the way up to $60. So you could have bought in 99, maybe a couple, like $2 all the way to $60. That's a 30 bagger. 30 times your money. And is it possible for this commodity go around? It's got even more possibilities than this does in terms of buying power against other assets. Commodities have never been this cheap. Stocks have never been so expensive. So you've got this massive, I can show you, disconnect. And the ratio right now is like 0.16. It's ridiculously cheap for commodities. So if you understand how cheap commodities are to all other assets, I think we have a huge opportunity. And I also think the opportunity is in physical precious metals because it's going to get harder and harder to extract these metals as time goes on with lower and lower ore grades and harder to get minerals. The projects themselves are going to be harder. They're going to be in worse off locations. The price is going to have to go through the roof. And then we're using it in everything. I'm talking silver, platinum, copper. I mean, it is all over the place. So I think it's going to be, it has more potential than even the last bull markets. Here's the hurricanes that I threw up here just to show you. There were some hurricanes that were going on when I was investing in natural gas, and it was throwing me all over the place. It's really hard with the weather. And the way that I look at it now is it has to be structurally driven, not event driven. And these are events. So I would just ride through them. They would go up and come back down and stuff. But I want the whole entire bull market. And that was 04, 05. So in 04, 05, it was 04 here all the way to 05. And that's why it went up so much. But then you want to hold on because you never got the sell signal. And we're still in a real estate expansion phase. We still had all that. And inventory was still low at that time. Everything was a go. Oh, and believe me, I learned my lesson. Believe me. Now, looking at the housing scenario, I talked about how many ounces could it potentially take to buy a house. And I'm going to go over that here. This was the commodity sell signal right here, where we should be selling our commodities. And then after 08, the 08 crash, it ran up for a couple of years to 2011. So that was 3 years. This was the move that happened. And during this move, gold made a lot of headway against homes because homes fell down in price and they were down pretty low and they stayed low while gold took off like a raped ape. I've got silver here because some of you guys hold silver. So if you want to transact silver, I didn't put the circles on here. But this crash down right here, if you can see that was the crash in 2009. And then it went vertical all the way up here, like moonshot vertical here. And it was a pretty fun ride. And then you gotta trade out for some house or other metals or something like that. And it depends on what you want to trade. You can sell it and put it into stocks if you want. What I usually do is stay out of the system. Palladium is usually the one that offsets the other metals. So palladium, I think, is going to go down. Platinum and all the other ones are going to go up. Here's the platinum price, just to show you how that performed. In 99, it was here and went all the way up. This was that sell-off here that I think is coming in copper right now. We went vertical and even in platinum. We went vertical and it's probably going to head down like this, just because, I mean, this is a big move I bet you we come back a little bit and then we'll take off. And then we take off like this, massive move. But you can see that platinum didn't go as high in 2010, 2011 as gold and silver did. Gold and silver really took off. So I think platinum's the good one to hold for the commodity portion, and then perhaps gold and silver are the ones that kill it after the crash. Now, using the chart that you have, you would have sold, this is the top of the commodity where the commodity to stock ratio was selling or throwing a sell signal. And then this was the top of the precious metals market in the red. So in the medium sales price for new houses sold, this is coming up. You would have sold your commodities here, and then you would have sold your precious metals, gold and silver here, and bought a house, because the house prices went down quite dramatically there. Now, looking at it from a ratio perspective, and I'm just using gold for the ratio, and you can do other ratios to find the exact amount. In 1980, the ratio was 130 ounces. That is your real estate to gold ratio. And then in 2011, it was 140 ounces. You could look at this because we are coming from a lower spot in 2011 here. Like we came up only back to 250. We could come all the way back down and compress it even further than 140. So we might be doing like a blow off top for gold and silver. I don't necessarily know, but if these guys are manipulating it down, the prices, you could see they could lose control of it and just absolutely moonshot when the physical runs out. If it does. I'm not projecting any of this stuff. I'm just saying it potentially could happen. It's not a projection. The conditions are there. And when I look at all this stuff, and I think this will happen a couple of years after the commodity top. So 2030, 2031, something like that. 2028 to 2031, I think is a good bet. But when I talk about all these things on the channel here, so when I consider myself an investor, which means I'm looking for undervalued opportunities. When I talk about conditions, market conditions, it doesn't mean that's a 100% outcome. It means that the conditions are ripe and they give us a big tailwind behind us to set, we'll call it to set records, so to speak. If you're running, you want a tailwind behind you, and you don't want it to be strong enough where it disqualifies the record, but you don't want to be running against a headwind. You want to be running with the tailwind. You want the conditions to be ripe for whatever you're going to perform. I want the conditions to be ripe for a commodity bull market to happen, and I want the commodities to be cheap relative to other assets. We are so lucky enough, all of us, to participate in what I would consider to be the biggest potential commodity bull market in anyone's life. Why do I say that? Because we've never had the housing market be so dorked up from the last crash with all those bad loans that the government had put in place. That set the conditions for a very underbuilt scenario in real estate. We are so underbuilt. I don't think we've ever been this underbuilt, with about 3.84 million homes underbuilt. So we have to build all these homes of new homes, which is going to be very inflationary. They're also dumping money on top of this. They're printing, which is also going to be inflationary. So we've got this inflationary, we'll call it soup, that they're stirring up. We've got the conditions in the real estate market that are there for a very large boom in an expansion phase of real estate. Then on the valuation side, commodities have never been this cheap in relationship to other assets like stocks, and they're very cheap in relationship to even other assets out there. Art, crypto, doesn't matter what it is. They're cheap against everything. They are at below 100-year lows, that ratio is. And what's coming ahead of us is the fastest transition to a different world than where we are today, infrastructure-wise. We are going to be putting copper everywhere. We're going to be using silver in all these electric cars. If they decide to go with this renewable electric vehicle world, we just created a bunch of demand on top of, I'll call it third world country demand, of putting up electricity, buying their first cars, buying their first home, which all has copper and more copper and more copper and more PGM metals and silver in all of those things. And we're going to be taking out, obviously, a bunch of other minerals, aluminum, steel, etc., etc. So we have this setup that I've never seen before align perfectly the market conditions. And I'm gonna kind of paraphrase this one last time. We have never been in this underbuilt of a scenario with the real estate market. We have a demographic that's a little bit larger called the millennials coming up in home buying years. We've never had the commodities be so cheap against stocks in over 100 years. Then we've got an incredible amount of demand that's coming for those commodities right around the corner. So we have an inflationary push behind us with real estate. We had a crash of COVID, which is an inflationary push behind us with monetary inflation. We've got the undervaluation in commodities, and we've got the supply demand that's never been so great ahead of us for a lot of these commodities. And if you say, what commodities are your favorite? I would say platinum, silver, gold is obviously good, copper, iron, steel, tin, uranium, oil, and natural gas, just off the top of my head. And there's probably more than that. This is going to be, I mean, you could literally just throw darts at anything. Fertilizers would be very good too. Potash, that would also be a very good one. But all these commodities, they're super undervalued. And the approach that I'm taking is a strategic approach, is portfolio allocation, 1 to 5% in each position. Look at those sectors, kind of get a little bit of everything. I'm going a little bit of royalties, a little bit of diversified miners. And then I've got developers and very little explorers. So I've got a good chunk in developers, a good chunk in some of the producers that are big diversified mining companies, and then a big portion in royalty companies, which basically takes out the inflation risk. And that's how I'm playing this. Guys, if you have any questions, put in the comment section, anything that you need to know, anything that you were wondering. And thank you for listening. This is Finding Value.